Chers actionnaires,
all right, good morning, dear shareholders, ladies and gentlemen. In my capacity as chairman of the supervisory board, I'd like to welcome you here to this 2026 AGM of Unibail-Rodamco-Westfield. This is the first time we're holding it at our own headquarters. We're telling participants that there is simultaneous translation. You have headsets.
On us, should you require a headset for English translation, please ask our grand staff now.
All right. So I have with me Mr. Vincent Rouget, who is chairman of the executive board, and Mr. Zetoun, who's the counsel of our company. I'd like to welcome the other members of the supervisory board, the other members of the management board, and members of the executive committee. And they are in the room, and they will be there as well to take questions if you have any questions for them. I would like to welcome Vincent Rouget, who's been the chairman of the management board since the beginning of the year, and I would like to pay tribute to his predecessor, Jean-Marie Triton, who revived the group's growth in a particularly challenging environment. And together with the supervisory board, I'd like to congratulate the company on the strong operational performance last year in all its businesses, and this goes to show the robustness, the resilience of its business lines and its portfolio at large. And this reflects the first combined positive effects of the group's transformation and its roadmap for 2025-2028, entitled Platform for Growth, that was presented back in May of last year, and the ecosystem of the group's performance and its the strengthening of its balance sheet, because we increased the valuation of the portfolio, but there were also disposals to the tune of $2.2 billion euros, and that certainly will contribute to strengthening our position in a volatile environment and challenging context. And so in this context, we've decided to propose this year a dividend of 4.5 euros per share for the year 2025. So that's almost 30% up compared to last year. And I'm also happy to note that the group is opening a new chapter, and is moving confidently with its new Platform for Growth roadmap in what you know is a complex and volatile environment. On the strength of its business model, the quality of its implementation, and the resilience of its operational platform, we have good medium-term visibility, and that momentum enabled us to commit as early as February of this year for a projected payout or a distribution in 2027 for the year 2026, a 22% increase to 5.5 euros per share. And Vincent Rouget, who chairs the management board, will provide details on the performance of the group, but also the challenges. Now, in keeping with the regulations, I will now officially call to order the AGM of the company as convened by the board, and propose to appoint the following. The scrutinies will be performed by Rock Investment, represented here by Mr. Anthony Marek, and the URW Fund, represented here by Madame Marie de Chalandard. And for those of you attending the AGM annually, you recognize Mr. David Zayton, who will be the secretary of the AGM. And I would like to tell you about the presence of the statutory auditors, represented here by Mrs. Marjorie Blanc-Lourme, Mr. Sylvain Durafour, and Régis Chemonnier. The latter will present the conclusions of their reports. So to have real-time counting of the votes on the resolutions, we will have electronic voting. Mr. David Zaitun will review the terms of the notice for the meeting and the availability of the documents. All right, so the notices were issued in line with applicable rules and regulations. The board of directors has not received any requests to add to the agenda. All the information and documents required by law were made available to the website, in line again with legal rules and provisions. Regarding the agenda, you can take a look at the notice which was made available at the entrance of the room, but was also available on the website, and then the 2025 universal registration document was also available online and in paper. You have on the desk the documents there that will certify the validity, not just the notice, but the actual deliberations, and you will find on the website, under the AGM section, the presentation of this meeting as is being displayed on screen. The entire AGM is being broadcast on live, but you will also be able to find it on the website, again subject to the conditions, legal provisions applicable to such replay. And then there's Raphaël Perrault, judicial officer, will be appointed for the regularity of the meeting, and the rules and regulations for the meeting are also posted at the entrance of the room. There was a special electronic mailbox that you could use to send questions in writing. We have received 4 such questions. The Forum pour l'investissement responsable by Mr. Decret. Because of the general technical nature of the questions, shareholders are requested to look at the Q&A on the company's website dedicated to the 2026 AGM. Regarding the quorum now, we have 144,246,141 shares for the this is the first call of the AGM, so the quorum we need is 1/5 the voting shares, so that's 28,843,229 shares, so that includes the mail-in votes. And then the quorum required for the extraordinary AGM, that's 1/4 of the voting shares, 36,054,036 shares. And all told, we have 79.72% of the voting shares at this point. All right. Well, thank you, David, for these clarifications. As indicated in the notice of this meeting, it will no longer be possible to sign the attendance sheet after 10:45 a.m., and shareholders arriving after that time will not be able to take part in the vote. And now I'll give the floor to Vincent Rouget, who is chairman of the management board, and he'll tell you about the performance for 2026. Thank you, Jacques. Good morning, ladies and gentlemen, dear shareholders. Before we go through all the details of the year 2025 and sharing with you our strategy for the year, strategic priorities, in my capacity as chairman of the management board, I would like to thank all the teams of our group throughout the regions where we operate throughout the year. And thanks to their hard work, we had excellent performance in 2025, but also very promising trajectory for the year, for the first quarter. And this performance enables us to be confident for the 2025-2028 roadmap. And this is why we decided to look forward to a significant increase in the payout to 5.5 euros per share. So this was a very successful year for URW. There were a number of achievements, and of course the execution of our roadmap platform for growth. REPS for 2025 exceeded the forecast. It stands at 9.58 euros per share. We're delivering good performance along with the roadmap, attractive organic growth, disciplined capital allocation, and significant deleveraging. This is thanks to the operational performance of our shopping centers with an increase in footfall and tenant sales, the strength of our leasing activity, and a vacancy rate which is the lowest since 2027, and that enables us to expect even better rental pressure throughout our portfolio. We've also made strategic strides to prepare for the future, which will not have much impact on the balance sheet. There's a new franchise business, and that's the first in the shopping center business, and also an acquisition of a 25% stake in St. James Quarter, an iconic business from Edinburgh. This shows the significant growth potential of Westfield, which is, of course, reflects our competitive edge and our operational capabilities. We've also delivered significant projects. The retail sphere at Hamburg-Überseequartier and the expansion of Černý in the Czech Republic. Finally, in terms of debt, we had 2.2 billion euros in divestment of either completed or secured since the beginning of 2025 that reduced the debt ratio, the LTV, loan-to-value ratio. We've met our commitments regarding earnings and distribution for 2025, thanks to these, but also refinancing operations and hedging operations. Finally, our platform for growth roadmap aims to generate sound and sustainable growth through a unique portfolio of urban investment property, as shown by our 25 results, and with the completion of our because of the disposal of non-strategic assets, we now have a very diversified homogeneous portfolios centered on high-level shopping malls that are exclusively focused on flagship properties. Our balance sheet has strengthened because the debt-to-equity ratio is at its lowest since 2019. We'll certainly achieve the ratio to 40% by 2028. This positive momentum gives us more flexibility to unlock our growth potential in keeping with our roadmap. Now, if we focus more specifically on the operational performance of shopping centers in 2025, we've seen a continuous improvement of our key indicators across all the regions. These key indicators are in the green, in particularly tenant sales, and that outperform national indices, as well as core inflation, and you'll have the numbers for Q1 in 2026. These are already up 5%. Vacancy rates were down 20 basis points to reach a historic low, and this is because of strong leasing activity, which continued in Q1 of this year. We signed as many upwards of 400 million in guaranteed minimum rents, with average uplift of 11% above the index rents for the long-term leases, and that is in line with the levels of 2024. We will certainly continue this momentum in 2026. Leasing our space is, of course, our priority, and we're pleased to see that the strategy has been successful again this year. I'd like to thank our leasing teams since the beginning of 2026, in spite of a very volatile environment. With our platform, our roadmap platform for growth, we have a simple, clear plan based on our performance ecosystem, where we have a clear opportunity to increase footfall in our properties, but also to continue to boost the sales of our retail partners, but also intensify rental pressure, reduce vacancies, and consolidate market shares and gain market shares through our competitiveness. This will enable us to have a growth on the constant basis and develop low capital intensive opportunities for the group. Now, how can one increase the footfall of our investment properties, and how can we boost retail tenant sales? Well, this, of course, is based on attracting the most desirable concept for our flagship properties, because we're a profitable growth platform for these brands. You may remember that the flagship stores are a key driver of customer acquisition for these retailers, and these stores are located in city centers on major roads such as the Champs-Élysées. And today, these flagship stores are more and more present in the Westfield centers, and they're a key pillar of our value proposition. So we offer premium locations with outstanding footfall and, of course, profitable growth. And so in 2025, we present a very concrete example, the Forum des Halles in Paris compared to the Champs-Élysées in Paris. Now, footfall is more or less identical, 65 million people per year, and the sales per square meter is also similar, maybe even higher at the Forum des Halles, but the rents at the Forum des Halles is significantly lower, more competitive than that of the Champs-Élysées, as you can see on the slide. And this mechanically translates into better profitability for the brands present in the flagship stores in the Forum des Halles. Now, you say Champs-Élysées have a different value proposition, so you cannot exactly compare the two. But and if you pay twice as much rent, this is because you have a flagship store in a very prestigious place for the brands. That's what is known as media value. But at the very least, in the retail business, this exclusive or near exclusive positioning of the group in flagship assets puts it in a very desirable, enviable market segment, making it different from all other shopping areas. But of course, on these flagship stores, the sales to or rent ratio is not the only criterion. Here there's additional value that is in fact reinforced by the fact that we are the single owners, because many lease operators have joint property, and so this we can have a better customer experience and have more visibility on footfall. And we have a belief at Unibail-Rodamco-Westfield, flagship retail is the future of e-commerce. In this respect, we are also at the forefront of data and artificial intelligence, and we discussed this in last year's AGM. And this is a result of 4 years investment in technology, as well as the group's structural position and the size of our flagship portfolio. And we had a specialized startup called DJEs, which converts video feeds from our shopping stores in segmented data, so we can better analyze and understand customer journeys and footfall in the flagship assets in an anonymized fashion, in line with the RDP regulations. And that enabled us to monitor the performance both for leasing but also asset management. And so we can measure such things as bounce rate or footfall for each store almost in real time, which is very valuable. So these indicators, of course, strengthen our exchanges with retailers, and we can improve decision-making based on the data and informed decisions. And on this right-hand side, you can see some anonymous data which illustrate these indicators for a fashion retailer. For several of these items, you can see the sort of questions raised by such data. Some of them are highlighted on the slide, but we're looking at a huge volume of data that needs to be processed basically in real time. And that's, of course, the major role of artificial intelligence to take the full potential of this technology, not just for this decision making, but also for improving performance of our retailer partners. And the use of this technology with this data enables us better to manage our assets and our competitive edge, and that is our second priority for the year 2026, after leasing, of course. Regarding sustainable development now, URW has made significant headway in 2025 and is recognized amongst the 100 most sustainable companies in the world, as recognized by Corporate Knights and Time magazine. We also have one of the highlights was the cultural partnership of Le Louvre au Centre. We bring reproductions of iconic works from the Louvre in shopping malls in France, and so we facilitate access to culture and strengthen the link with our communities. URW is on track to achieve its objectives for the roadmap known as Better Places, but you'll find more details, much more detail on 2025 performance in the Universal Registration Document, which was published back in March. I'd like to add that Better Places is a central strategic pillar for the group, indeed a key pillar of our long-term competitive edge. With a portfolio of 45 billion euros worth of assets and tenants, upwards of 900 million visits per year, we have good visibility and a possibility to have an effect on our local communities. We can also play a role in today's society, especially at a time when digitalization has strong effects on social ties, and we're in a position on our own scale to reinvent living together, community life in our own way, in line with our mission statement. But over and beyond the leasing of our spaces, innovation, data, the third strategic pillar is simplifying the structure of the group. We've already made, again, significant headway in 2025 because we have now 4 regions instead of 11 countries. We disposed of non-strategic businesses, and we also delisted Australian CDIs. Indeed, to this end, we're submitting to your approval the de-stapling of URW stable shares that will generate costs and efficiency gains, but it is tax neutral, and this preserves, of course, the economic rights of the shareholders. We're also reducing the number of subsidiaries. In 2026, we are focused on keeping our costs under control. I mean, we have the pleasure of holding this AGM at our own headquarters, but that's just a case in point for savings. There are also wage restraint, as you can see, at management board level. We are committed to developing simplicity, agility throughout the group for all our teams and all business lines. This is essential if we are to free up our own resources so that we can focus our time and energy on generating growth, on developing our competitive edge, and indeed on developing artificial intelligence and creating more impact. Before we move on to the dividends and the outlook for 2026, I'm delighted to welcome on the management board Kathleen Verlest as Chief Investment Officer. She joins Anne-Sophie, Fabrice, Sylvain, and myself, of course. We're excited to lead the group in this new direction. This was published on the roadmap, and her appointment was welcomed by the markets. We have 3 clear priorities for 2026. You have them up on the slide, and we covered this before. In 2025, we delivered attractive growth on the like-for-like basis, keeping our costs under control and managing our investment properties, and we certainly propose to continue this strategy in 2026 and through to 2028. Let's look at the dividend for 2025. We secured 2.2 billion in divestments, as announced in the 2025 Investors Days rather. Because of the strong financial performance, we offer a cash dividend of 4.5 euros per share for the year 2025. This is almost 30% up compared to 2024, and this is a payout distribution ratio of 47%. Let's look at the outlook for 2026 now. During Investors Day, we announced a AREPS figure of at least 9.5 euros per share then in 2026 to reflect the effects of our divestments, of our disposals. We raise the forecast now to anywhere between 9.5 and 9.3 euros per share. That would be an operational growth of 5%, supported by strong operational performance in the retail business, and that we do not foresee any degradation of the macroeconomic or geopolitical environment, however. Finally, in line with our commitment to deliver attractive returns to shareholders, we propose to have a dividend of 5.5 euros per share for the year 2026. This would be paid in 2027. That reflects our confidence in the group's outlook. As we said earlier, this would be a distribution ratio of about 60%, and that would be 22% up compared to the year 2025. In line with the trajectory that we announced on Investor Day, the distribution ratio in 27-28 should be anywhere between 60% and 70%, and that, of course, ensures an increase in the distribution per share by 2028, but this is also in line with our LTV reduction trajectory. Finally, instead of being a dividend, this will be a reimbursement of capital contribution, and we will continue this until such time as we can completely reduce our debt. Now it's about 2.5 billion euros at end 2025. A few words now about the reasons why I'm really excited to be at the head of this company, and very confident in the fact that we can deliver long-term sustainable growth. Our assets, our know-how, our brand are an ecosystem of performance. It's a powerful competitive advantage. We have a sound, profitable, and cash-generating business model, and more specifically, I'd like to refer to the strategic position of our brand. Our EBITDA margin of 63%, EBITDA per employee stands at more than 1 million euros. We have attractive, sustainable growth, and the cash flow conversion stands at about 75% of EBITDA, based on our trajectory looking to 2028. Over beyond the property business, you'll find few companies or indeed industry with that kind of numbers, whether in the S&P 500 or the major European stock indices. To that end, my colleagues on the board and I are committed to unlocking the potential of our company through platform for growth and become leaders in the industry. This will enable us to generate attractive growth and returns for our shareholders, to continue to expand our addressable market, especially with the low capital businesses, and create value for all stakeholders. Thank you for your presence, and thank you for your attention. Well, thank you, Vincent, for this presentation. I would like to welcome our new member, David. Thank you also. Would just tell us how governance operates in the company. Well, yes, Vincent Rouget told you about the membership of the management board, subject to the renewal of Fabrice Mouchet, the appointment of Kathleen Verelst. We'll have 9 new members at the end of this AGM. If you agree, we'll have 44% women, 56% men, from 4 nationalities. The independence ratio is about 76%. We have a various profile with different horizons. The management board has 2 specialized committee, a supervisory committee, a governance committee, a appointment and compensation committee, with an independence ratio of 67%. Okay, we will continue with the appointments, compensation. Yeah, we decided to keep these compensation under control and index it on long-term performance. Vincent Rouget is 25% below that of his predecessor, and the variable long-term bonus is upwards of our policy at 180% of the fixed revenue, and 25% is based on performance of our platform for growth, EBITDA, on net debt to EBITDA, and the total amount of return to shareholders between 25 and 28 inclusive. Jean-Marie Tritan's departure conditions were treated in keeping with the strict abidance to the AFEP-MEDEF compensation because of the circumstances of his departure. We're looking at a bonus upwards of the AFEP-MEDEF code for 2025-2026. All these details are in the universal registration document. Well, thank you, David, for these details. And now I'll give the floor to Régis Chamonix, who represents the auditors, and he'll give us a summary of the group's performance. Yes, ladies and gentlemen, on behalf of the auditors, I would like to show the reports established for the ordinary and extraordinary part of this annual general meeting. All the reports were made available by the company, and you will find them regarding the related party agreements in the universal registration document. This is available on the company's website. In line with the customs of this AGM, I'll go through the highlights of this report. The fundamental purpose of our mission is to arrive at reasonable assurance on the fairness and actuality of the numbers with no significant anomalies. We, of course, assessed the amounts through sampling both in the annual and the consolidated financial statements. There was also some internal auditing. We looked at the estimates that were used by the company and the presentation of the accounts in general, and our reports on the accounts also include a specific part describing the key items of the audit, any risks of significant anomalies, which, based to our own judgments, are the most significant. Anyway, regarding the annual financial statements, and that needs to be voted on in the first resolution, our report is to be found on page 444 of the universal registration document, and we have no reservations on these accounts. In the third part, the key items of the audits are assessing the redeemable shares and receivables, consolidation of the financial debt, and derivatives. In financial instruments, we also went through the specific checks as provided by rules and regulations, especially on the supervisory board and corporate governance. Regarding the consolidated financial statements, and that's resolution number 2, our report is to be found on page 438 of the universal registration document, and we have an opinion without reservations on the consolidated accounts and the annexes for the accounts for 2025. And in the third part of this report, remind the key items of the audits that produced our opinion. We identified the following key items: evaluation of the investment property portfolio, including investment properties under construction, either held directly or within joint ventures. Secondly, the recoverable amounts of intangible assets within indefinite useful life, and goodwill related to the acquisition of Westfield. And we also, in our report, we said that we went through the specific checks as provided by rules of regulations on financial accounts. And then we'll have a summary on the special report on related party agreements. You'll find the full version on page 449 of the universal registration document, which is resolution number 5. In the first part of that report, we tell you that we were told that there were no new such agreement for the year 2025 or regarding 2026, and we were told of one existing related party agreement that had been approved in the previous AGM and whose performance continued for the year 2025. Now, regarding the report on resolutions 21 to 23 of the AGM, there are no specific observations for all these resolutions. We will produce additional reports if necessary, as these authorizations are used by the management board. Thank you for your attention. All right. Well, thank you, Mr. Gemini. Now then, I suggest we have a Q&A session that will enable shareholders to make comments or ask questions. If you do wish to speak, please introduce yourselves, and please be concise so as to enable as many shareholders as possible to take the floor. You will find microphones. All you need to do is raise your hand and you will get a microphone, so that all participants can hear you. Good morning, ladies and gentlemen. I'm an individual shareholder. I only attend AGM, so I didn't get the information elsewhere. But what's the connection between Mr. Rouget and Unibail? Where was he before he became CEO and chairman of the management board? And well, what is his seniority and what his background? It's true. We could have gone through Vincent's resume. I mean, he joined us a few years back, but he can introduce himself. Yes, I joined UWR exactly 3 years ago. That was June 1st, 2023, after the 2023 AGM. Before that, I spent 16 years with Léon Bressler, the former CEO of Unibail, who was the CEO of Unibail, working with him in a property investment fund, a pan-European fund. I was working with him and looked at all investment and asset management of the portfolio in Western Europe, not including England, Ireland, or Scandinavian countries. We were managing about 10 billion euros in equity over 15 years in Europe. Right then, he is no amateur, and he is well familiar with the property business. Good morning, and congratulations, and many thanks. I'm also an individual shareholder. We were told that the dividend would not be a dividend as such, but rather a reimbursement of equity. What does it mean in tax terms? It's a fair question, you know. I can answer in simple terms that if you need any clarifications, I'll give the floor to Fabrice Mouchel, our Chief Financial Officer. This means that when you receive that dividend, it is not taxable, because we are reimbursing the money you provided the company. So the tax base and the entry ticket will be lower. So, but it means that if you sell back your shares, you may have a capital gains tax, but as a dividend, you will not be paying income tax to the French, at least under the French tax system. Thank you. I hail from Meudon. I live next to Vélizy. Can you tell us about the stores there, and when will work begin? Thank you. What work are you referring to, sir, in Vélizy? Vélizy 2 is one of our finest properties. On the parking lots. On the parking lots, we are looking at a few months' worth of renovation and consolidation of parking areas on that site. But there are other development projects. We are restructuring the wings, and we're extending the concepts. There will be a Zara flagship store, and so this mall will certainly develop over the next few years. We are working hard on this. This is one asset where we've been working hard to attract the right concepts, the right flagship stores, with a view to consolidate or indeed reinforce our footfall. It's a very competitive site in the Paris area, so we need to keep this asset at its best. And we expect work to be completed by end 2026. Good morning, sir. My name is Jean-Richard. I'm also an individual shareholder. I'd like to know, I was told, and not often, but once or twice I was told, that Unibail was a stakeholder in the Triangle Tower, the Tour Triangle. Is that true? And the answer is yes. And what's your stake in this? And what will there be in this Tour Triangle? We were not told. Thank you. Yes, go ahead. This is true, and we're proud to be shareholders in this project. We have 30% of that project, alongside with AXA, our institutional partner. They have 70%. The tower is being built as we speak. We've achieved the topping yard, so the structure, the skin has been completed, and the teams working on the site are now finishing the inside work and architecture. This is a joint project. You have 90,000 square meters of commercial space, about 70,000 office space, and 20,000 square meters for other users. So there will be a hotel with more than 100 rooms. There will be an event area, panoramic space with an American partner who has a venue at 1 Vanderbilt, and so this is very successful in New York. But we certainly expect lots of footfall, lots of interest, because it has got there will be an amazing view from that site. Anyway, we have leasing of other pre-leasing of the office space. Many brands have shown an interest. Many prospects have been visiting. So we are very confident as to the future of this project and our ability to lease the space. We are a historic player at La Défense. We were very successful there. Latest that was delivered during the COVID period in 2021 was the Trinity Tower that was not leased when we delivered it. But now, in a matter of 2 years, it was fully leased after completion at much higher rental values than the average at La Défense, because of the unequaled qualities of this place. And we'll have equal quality, indeed outstanding quality, at the Triangle Tower. And of course, it has its unique architecture, and no two levels are identical. And so on the first floor, you'll have spaces of one piece, 400,000 square meters, and then at the top you have smaller spaces, about 1,000 square meters, with breathtaking views on the Eiffel Tower in Paris. And so we will have various offers in what has been a rather challenging market, the office space business. Yes, sir. To the left, or to my right. Good morning. I was a historic shareholder. I was a shareholder of Unibail-Rodamco. I was witness to the merger with Westfield. But as a shareholder, I didn't look into the details of all that. But you can see that you're refocusing your business on shopping centers and giving up on other businesses. And the question I had, it seemed to me that Unibail was looking at services. Well, we do have an office space, and significant office space business in our portfolio. We're one of the big players in the Paris area. We have 2 billion worth of assets. Now, well, the total balance sheet is 49 billion. So indeed, the vast majority is on retail space, not just in Europe, but also the United States. But we do have significant exposure in the office space building. Ville Paris, we have 50%, and that is, of course, significant in the Paris area, and certainly carries the economic development of the Paris area. We're very proud to be involved in that. And we've been investing. Indeed, we are renovating and restructuring for phase 3 of the Porte de Versailles site. You can see it from the Beltway. And so we will be investing there. Now, the office space portfolio used to was a significant source of deleveraging. We've been disposing of these sites over the past few years, but that was part of our policy to focus to new, more profitable assets, develop the profitable assets, and deliver outstanding goods. But then, when they reach fruition, we divest and then invest in new projects. So we're still committed to the office space business. We have our own recognized know-how, but capital allocation will rotate in such a way as to recoup our investments in these businesses. This is still significant, but it is now a minority business. Outside the Paris area and outside France, you have multi-use, especially in the United States. Yes, that's a good point. In Hamburg, for instance, you have different uses, multi-use. You have not just retail. You have 100,000 square meters in retail, and this has been very successful ever since the opening in April 2025. We have about 100,000 square meters also office space, and we're completing that. 45,000 square meters in hotels. Lots of residential property was sold to third-party developers. But you can see you have multi-uses, and this is essential if you want to have these locations that draw lots of footfall, and with, of course, retail offshoots, which is, of course, important for us as operators in this business. And the person at the back of the room, good afternoon, good morning. I'm also an individual shareholder, and I also have a question about one specific project, because there's very little information. Is Unibail involved in reconstructing Ballard? That's where the sporting complex Aqua Boulevard is located. You also have shops. We don't have much information about that at all. Good morning, ma'am, and thank you for this question. I can confirm that we are a minority shareholder in that Aqua Boulevard project and in the renovation of that site. So can you give us some details? Well, the project is underway. We've got all the permits, and alongside with our partner, we are finalizing the concept. We are now talking to companies that might join and deciding on the best time to launch what is a beautiful multi-use project. You have a significant portion of office space, but also residential property, and then ground level retail space, and then there's a leisure business and a beautiful movie theater.
Si j'ai bien compris vos explications.
So if I properly understood your explanations about the services sector, you champion projects, you take part in the construction of buildings, and then you dispose them to reposition yourself on other assets that are similar or different. So if I got this right, you first championed the Trinity project, then you sold it. And as for the triangle high-rise, you said you had a 25% stake with AXA. Besides, the lady has just asked a question about the Ballard reconstruction project. It shows that you partially are involved in this operation. I'd like to understand what the point is of being involved in a project with a 25% stake. Is it because it's too heavy for the company's shoulders? Or am I wrong in thinking this, and is that a perfectly logical financial setup? Because we have indeed seen that a lot of players in the services sectors are playing musical chairs. I'm calling this the musical chairs in the services sectors. Mr. Roger. Thank you, sir. We do indeed own 30% of the Triangle project, and I think it's an outstanding example of the model that we want to implement going forward. I mean by that originally we launch projects. We have teams that can harness this expertise, that can produce highly attractive products, that can think of and design very attractive projects. We have had a new partner at the very start of the project in 2021, just as the permission was about to expire, the permission to launch the construction works. The project was launched. It could not be launched at the time on the Unibail-Rodamco-Westfield balance sheet because of our project to deleverage the group and to cut our debt further. Despite that, the group found or created the right conditions with the support of that partner to launch this beautiful project and complete it. In our approach in our strategic roadmap, the platform for growth, this is what we mean when we say a disciplined capital allocation going forward. Because if we were to launch all these developments at 100%, well, the reality is that today they are 100% financed with debt. Our objective is, however, to deleverage in order to be, again, strategically flexible at group level in order to acquire targets at the best time on the when market conditions are right. So it's part of our strategy. We want to find the right partners. For example, for the Aqua Boulevard project, the disposal of the 51% took place when there was no permission for these projects. It was a legacy project, and our partner bought a 49% stake, secured the permission, and got from authorities a change of destination, change of purpose for this part of the neighborhood. It's been designated as a hybrid use. Yes, and many financial partners see the expertise we have to put together a project. And we charge fees, we keep track of the development. As I was saying in my short presentation, this activity requires less capital but generates more growth at group level, and this helps us generate sustainable organic growth. Mr. Richier, in your presentation, you mentioned the Edinburgh project. Maybe you can give our listeners a reminder of the fact that we do take initiative. Mr. Roger, yes, we had the opportunity to take a 25% stake in the share capital of St. James Quarter, which is the iconic asset in the historical centre of Edinburgh. It was developed in the midst of COVID on the basis of very attractive investments. In this project, we partnered up with our existing partners on other assets in England, APG, a Dutch fund, that approached us because they are familiar with the group's expertise. They know that we can generate value with these assets. So we're going to reposition this asset under the Westfield brand sometime in 2026. It's really part of our performance ecosystem that we refer to as Jacques. It's really our ability to secure sustainable organic growth. Jacques Richier. It also contributes to the global prestige of the brand, of the Westfield brand. Are there any other questions? At the back of the auditorium. Oh yes, I can see the gentleman there on the right. Good morning, my name is Guy Picou. I'm an individual shareholder. Good morning, sir. I have 3 short questions. The share price is in the region of 100 euros. A few years back, it was above 200 euros. What is our reassessed net asset? And what is the turnover of buildings? That's my first question. Then, you are proposing the appointment of a new director, Juniel, the son of Mr. Niel. Could you maybe give us more details? He's 26. He graduated when he was 23. I'd like to know more about this phenomenon. He seems to have achieved a lot over 3 years. Third question. You are appointing yet another man in the board. You have appointed a woman. Is that to offset the appointment of the gentleman, or is it really about acquiring new competences?
Tu veux commencer, Jacques?
Would you like to start, Jacques? Well, I'll start with the last question, if I may, Jacques Richer. We have a new director who's right there. She's attending the meeting. We are delighted that Carole has joined us. As mentioned in relation to governance, what's really important for us is to have diverse profiles that will give a different perspective on the different issues. Carole developed a great brand. I don't know if we can promote it or advertise it here. Kuchten. Usually we have the perspective of what we call retailers. So this is what this lady gives us. So this brand is now present in France, but also in the United States, Kuchten. And it's interesting for us, as this is the perspective of one potential partner for Unibail in our shopping centres. And Carole joined us for these very reasons, because we were trying to strengthen our knowledge at the level of the supervisory board, our knowledge in the retail industry, which is evolving extremely fast. It's quite Schumpeterian. Some brands go under, other brands are created. So you need to be in contact with people who experience this on a daily basis. As regards Jules Niel, he's here, so you can meet at first hand this phenomenon, as you said, in just a few moments. As you've said, Jules has a broad experience, and I would also say natural experience. You mentioned his family background, so he was really immersed in an entrepreneurial context. He does have international experience in operations, but also as an executive. He is accustomed to board meetings, but also has had a number of responsibilities for a number of topics. He has worked in many different areas, a lot in technology, also a lot in innovation. We also wanted to increase our expertise in this. Earlier on, Vincent said that we work a lot on data-related issues, on how to use it, but also on AI. We also wanted to beef up this expertise. Besides, we haven't mentioned it yet, but I suppose we can. I suppose Vincent will give a reminder to Anne-Sophie, but you need to bear in mind this figure, 32%. 32% of our, let's call them consumers, are customers of our Gen Z customers. Well, I suppose you can easily understand that I'm not one of them. When you look at the membership of the supervisory board, it's quite important to understand this. Just like Carole brings with her this knowledge of retail, it's important to have someone who represents this generation. 32% today, it's the generation that will determine the way we will evolve our shopping centers and our offer. With Jules, we have the expertise I've just mentioned, especially in relation to technology and innovation, but also the perspective of that specific generation and their expectations and how we can meet them. So that's my attempt to answer your question about our two directors. Now, Vincent Rouget, about the reassessed net asset. The standards have changed, especially under EPRA, the European Association of Listed Companies, that brings together institutional investors and companies in this industry. So there's the net tangible asset, the NTA, which is in the region of 113 euros, which is almost a liquidation asset that does not take into account the group's valuation. It's quite interesting because we've signed a first franchise agreement in the Kingdom of Saudi Arabia. It's a new activity, as we announced during our Investors' Day. We believe that we could generate between 30 and 50 million euros in EBITDA per annum between now and 2028. So this really yields a lot of value potentially for the group. So we see this as a net liquidation asset that can maybe undervalues a number of assets, excluding tax aspects. There are two other metrics, 113 and 143 euros, if I'm correct, which are more based on going concern approaches, which are not liquidative assets, where when you buy a group share, you don't pay registration fees, so there's no reason to deduct them from the asset valuation. So the brand is valued. Also, there are unrealized assets. For example, the highly competitive financing cost that the group can benefit from with very interesting rates, 2.1 to 3%. It's very much more interesting than the market currently. It can also be factored in the net reassessed asset in these approaches. So just give you a ballpark figure. Of course, it remains lower than the historical high, but our feeling as management team is that the share price could be potentially reassessed, and that so we are not currently fully valued correctly. So we believe that this will improve over time as we improve our distributions, our payouts, and as we gradually deleverage. Thank you, Jacques Richier. Thank you, Vincent. Well, you asked 3 questions in one, so I suggest we now end the Q&A session. I would like to thank our shareholders for their questions and for the interest they have expressed and shown for their company. Over to David Zayton, who's going to inform the general meeting of the number of shareholders participating in the vote prior to the vote on the resolutions. As the signing of the attendance sheet is now over, I can inform you that 4,274 shareholders are present or represented to have voted by post. They hold a total of 114,964,933 shares. That is 79.72 shares of the voting rights. The quorum has therefore been met, and the meeting may validly deliberate. Dear members of the board, you will be invited to certify the accuracy of the attendance sheet prepared by Optilia, our registrar.
Bien, alors.
Jacques Richier. Right, well, under your supervision, we shall now proceed to the votes on resolutions. As is customary, the title of the resolutions will be projected on the screen. It will be in French. Maybe a quick reminder on how to use the electronic voting devices. Of course, before we begin the voting process, please ensure that your device is turned on and that the number of shares you hold is correctly displayed on the screen. Once voting opens for each resolution, simply press the button corresponding to your choice. The green key 1 to vote in favour, the yellow key 2 to abstain, the red key 3 to vote against. You may change your selection as long as the hourglass icon appears on the screen for approximately 10 seconds. For the duration of the vote, please turn off your mobile phones for connection issues. Finally, kindly return your device to the host as you exit. Very well. I now propose that we begin the voting on the resolutions. First, resolution approval of the statutory financial statements for the year ended on December 31st, 2025. The vote is now open. The vote is closed. The resolution is approved. Second resolution, approval of the consolidated financial statements for the year ended December 31st, 2025. The vote is now open. The vote is closed. The resolution is approved. Third resolution, allocation of net income for the year ended on December 31st, 2025. The vote is now open. The vote is closed. The resolution is approved. Fourth resolution, distribution of an amount deducted from the additional paid-in capital account. The vote is now open. The vote is closed. The resolution is approved. Fifth resolution, approval of the statutory auditor's special report on related party agreements governed by articles L22586 et sec of the French Commercial Code. The vote is open. The vote is closed. The resolution is approved. Sixth resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mr. Jean-Marie Triton as Chairman of the Management Board. The vote is open. The vote is closed. And the resolution is approved. Seventh resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mr. Fabrice Mouchel as member of the Management Board. The vote is open. The vote is closed. And the resolution is approved. Eighth resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mr. Vincent Rogier as member of the Management Board. The vote is open. The vote is closed. The resolution is approved. Ninth resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mrs. Anne-Sophie Sancerre as member of the Management Board. The vote is open. The vote is closed. The resolution is approved. 10th resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mr. Sylvain Moncouquiol as member of the Management Board. The vote is open. The vote is closed. And the resolution is approved. 11th resolution, approval of the total remuneration and benefits of any kind paid during the financial year ended on December 31st, 2025, or granted in respect of the same financial year to Mr. Jacques Richier as Chairman of the Supervisory Board. The vote is open. The vote is closed. The resolution is approved. 12th resolution. Approval of information relating to the remuneration of the corporate officers mentioned in Article L22-10-9 of the French Commercial Code for the year ended on December 31st, 2025. The vote is open. The vote is closed. The resolution is approved. 13th resolution. Approval of the remuneration policy for the Chairman of the Management Board. The vote is open. The vote is closed. And the resolution is approved. 14th resolution. Approval of the remuneration policy for the members of the Management Board other than the Chairman. The vote is open. The vote is closed. And the resolution is approved. 15th resolution. Approval of the remuneration policy for the members of the Supervisory Board. The vote is open. The vote is closed. And the resolution is approved. 16th resolution. Renewal of the term of office of Mr. Jacques Richier as member of the Supervisory Board. The vote is open. The vote is closed. The resolution is approved. 17th resolution. Renewal of the term of office of Mr. Roderick Munsters as member of the Supervisory Board. The vote is open. The vote is closed. And the resolution is approved. 18th resolution. Ratification of the cooptation of Mr. Jules Niel as member of the Supervisory Board. The vote is open. The vote is closed. And the resolution is approved. 19th resolution. Appointed Ms. Carol Benoria as member of the Supervisory Board. The vote is open. The vote is closed. And the resolution is approved. 20th resolution. Authorization granted to the Management Board to enable the company to purchase its shares in accordance with Article L22-10-62 of the French Commercial Code. The vote is open. The vote is closed. And the resolution is approved. 21st resolution. Authorization granted to the Management Board to reduce the share capital by cancellation of shares bought back by the company in accordance with Article L22-10-62 of the French Commercial Code. The vote is open. The vote is closed. And the resolution is approved. Resolution 22, 22nd resolution. Delegation of authority granted to the Management Board to decide on the issuance of ordinary shares and/or securities giving access to the share capital of the company or one of its subsidiaries and/or debt securities without preemptive subscription rights for the benefit of one or more specifically designated persons suspended during a public tender offer. The vote is open. The vote is closed. And the resolution is approved. 23rd resolution, delegation of authority granted to the management board to increase the share capital by issuing ordinary shares and/or securities giving access to the share capital of the company reserved for participants in the company's savings plan, the Plan d'épargne d'entreprise, without preemptive subscription rights, in accordance with Articles L3332-18 et sec of the French Labour Code. The vote is open. The vote is closed. The resolution is approved. 24th resolution, amendments to Articles 12 and 18 of the Articles of Association to comply with changes introduced under France's Attractiveness Act and Decree number 2026-94. The vote is open. The vote is closed. And the resolution is approved. 25th resolution, amendments to the Articles of Association in order to terminate the stapled share principles as a consequence of the streamlining of URW Group's legal structure through an internal reorganization. The vote is open. The vote is closed. And the resolution is approved. 26th resolution, adoption of the text of the new Articles of Association of the company following the termination of the stapled share principle. The vote is open. The vote is closed. The resolution is approved. The last resolution, 27th resolution, powers for formalities. The vote is open. The vote is closed. And the resolution is approved. Jacques Richier. Well, you caught me off guard. It was a bit long and tedious, but it's over. Thank you, David. Thank you for managing the different votes and resolutions. Now, dear shareholders, I'd like to thank you for your participation in this vote. Again, I'd like to thank you on behalf of Carole Benarea for her election. Also on behalf of Roderick Munsters and also in my personal capacity for renewing your trust in us. And to conclude this meeting, I would like to once again express my gratitude to our shareholders for their continued support over all these years. And throughout this redeployment, they gave us the necessary trust. They supported us when things were more challenging. And we're also delighted to share the better times with them. Also, I'd like to congratulate Jean-Marie Tritant for his work, the part he played in the transition that occurred smoothly in the transition at the end of 2025 with Vincent Rouget. Also, on behalf of all the shareholders, but on behalf of the supervisory board as well that is present here, I would like to congratulate Vincent Rouget for his new position, for the work he's done, and also other members of the management board who are attending, as well as all of the group's employees for their outstanding work in 2025, which is the result of their constant commitment and total dedication, which has enabled us to present these 2025 results and the outlook for 2026. I personally believe that an effective, well-performing company is also about a great team, which is what we are fortunate enough to have. Ladies and gentlemen, thank you very much for attending this general meeting. Thank you for your trust. Have a lovely day. Thank you.